Yeah, Jedi Options today is going to be a little more philosophical, conceptual, not a specific strategy, but maybe how to think about the options market and the advantages that it provides, right? And the way I like to do this, most people are starting with stock first. They get the idea of owning equity in a company. You buy stock, it goes up, you make money. So I want to talk about some of the differences, the compare contrast. What do you get when you graduate from stocks into options? And so we're going to call this the three dimensions of the options market, of option strategies. Think about a stock trader for a second. When you trade stock, it's very one-dimensional. Very one-dimensional. And that dimension is direction. You ask the same question every day as a stock trader: up or down? Do you have an opinion? Is this stock or is the market going to go up today? Is it going to go down? Is it going to go up over the next week or down over the next week? That's it. You're just playing a directional game. There is no alternative. If you have an opinion, you play, and that opinion is either up or down. If you don't have an opinion, you don't play, right? And so one of the challenges, I think, sometimes with stock trading is that maybe you can't find trades, right? Maybe you struggle finding ideas. You say, boy, it would be nice if I could open up other dimensions, if there were other questions I could ask where I have an opinion on the answer that I can then build a trade around. Well, how do I do that? When you go into the options market, okay, it is three-dimensional. Three-dimensional. So what are the three dimensions? So you have direction, you have volatility, and you have time. Direction's the same as with stock, up or down. You can do directional trades with options. Why would you do options with a directional trade versus stock? Well, it enhances your leverage. You can make a more levered bet. And you can be a lot more specific in terms of how you structure your risk versus your reward. So you could be a little bit more nuanced with the way you build the trade. What I want to focus on more is the benefit you get with volatility and time, these two additional dimensions, what it means when we say volatility or time, and how you profit from that. So first of all, from a Greek perspective, the cool kids in the options market, they have their own lingo, their own language, their way of speaking about things. Direction, we call that delta. Volatility is vega, and time is, of course, theta. So from a volatility perspective, really the question here is it's speed and magnitude. Speed and magnitude. What you're asking is, magnitude. There we go. What you're asking is, hey, I don't know. I don't have an opinion on direction. Like, I don't know if the stock's going to go up or down. I just don't think it's going to move that much, right? So I think it's not going to move very much. Fine. You can build a trade betting that very thing. You can build a trade that bets market's not going to move that much. I don't know if it's going to go up. I don't know if it's going to go down. Don't have an opinion. My opinion is it's not going to move that much. Good enough. You can build a trade. You can get paid if you're right. Right? And that is known as short volatility. You're going to short volatility. And that is done with strategies like iron condors, like short strangles. Even with a slight directional bent, you could say the same thing when you're selling puts, when you're selling calls. You've heard Mark talk a lot about, I just love puts, or, that's why I like cash flow. That's why I like betting on volatility, because I don't have a strong opinion of the market right now. It's a mess. Don't have a strong opinion. And yet he's still trading every day. Cash flow Vikings, putting on trades, because they have a strong directional opinion. Yeah, maybe sometimes, but oftentimes it's like, I just don't think we're going to move all that much, right? Or we're not going to go down too much. All right. Well, I mean, that is the beautiful thing about volatility, is you got more levers to pull, right? One other dimension you can play in when you learn the dynamics. Okay. Now, maybe your opinion is the other. You say, you know what? Actually, I think we're going to move a lot, right? We will move a lot. So I don't have an opinion on the direction. I don't know. Don't have an opinion. I just think we're going to move. I think we're going to move a lot. Up Down, don't know. We're just going to have a big move. The magnitude is going to be large. Good enough. You got that opinion. You can make a bet on it. And if you're right, you make money. So this, another way of saying it is you're going to go long volatility. You're going to do a long straddle or a long strangle or an inverted butterfly. Last week, in last week's Jedi Options, there was a Fed announcement, and we did a long strangle. We were betting on a big move in small caps. So we did a volatility trade. That's an example. I couldn't have done that if I was just doing directional stuff. Couldn't have done it. If I was a stock trader, I probably just would have stayed away. I don't have an opinion. But here we did. Thought magnitude was going to be big. We built the trade around it, right? So it's a volatility trade. The third final dimension, this idea of betting on time. Betting on time. Ultimately here, the bet is just time will pass. That's it. Like there's not really counter to that. It's just, I just think time's going to pass. Well, listen, do you think that or do you know that? I mean, the fact is there is no ambiguity here. Like time will pass. And so the beautiful thing about options is you can structure positions where it's not so much a bet on direction. It's not so much a bet even on volatility sometimes. It's just a bet that time will pass. And so you do cash flow based trades, really anything where you're selling options, right? You have a time component, right? Where you're more gaming that variable. And when you think about the difficulty, right? The difficulty, direction, volatility, time. Well, most people that are stuck in this one dimension, whether they know it or not, they're in the hardest one. Direction is always the hardest. Hardest. Is the market going to go up or down? It's going to go up or down. It's going to go up or down. It's hard. It's hard to be consistent. It's hard to be on the right side of that a lot. Betting on volatility, how much we're going to move, easier to have an opinion on that, easier to build a trade around that, right? So as you graduate from directional betting into more volatility-based stuff, you discover it's a little easier to do this. It's not as hard. I win more often. And then, of course, time. Well, time's the easiest because it's a one-way street. Time goes by. If you're building option trades that make money as time passes, you're kind of dealing with the easiest of the three dimensions. So as you think about this, kind of final point is you start to see, why there's so many different option strategies, because it's multidimensional. There's different variables you can wager on. That's why it's more complex than stock, right? That's number one. And then number two, just some of the benefits that you open the door to easier variables to bet on. That it makes it easier to find trades because there's more things to do. And so those are some of the reasons why I like the options market. That I think is a really clever way of positioning them versus stock and helping to see both a novice and a veteran trader understand what you're really getting, like when you enter the options trading realm. And listen, as an invitation, like this is why we have option classes. This is why Mark and I trade options. This is why Matt trades options. This is why this is a core part of our investing process, because we want these benefits and you get them as long as you're willing to play in the options market.